Great. Welcome, everyone, to your Farm Business Podcast. My name's Mike Krause. I'm CEO of Plan to Profit Agri, a powerful farm financial management software program. And today's podcast, we've titled it, How Banks Are Readily Making Lending Decisions Now Since the Royal Commission. Recommendations in 1.114 of the Hayne Royal Commission requires banks to use experienced agricultural bankers when dealing with distressed farm loans and to offer the farm debt mediation early. Since then, regional branch numbers have kept shrinking. Government figures themselves show more than 1 in 3 regional branches have been closed since 2017. So that's only 9 years ago. Though the majors banks have agreed to pause this closure until 2027, which is about a year away. Credit decisions on rural loans are increasingly made by centralised city-based teams rather than local managers who know the district. Total agricultural lending has grown to $120 billion, so it's a big sum, but it's concentrated in relatively small numbers of large operations, nearly half farmers carrying little or no debt at the moment. This episode, we are looking at the shifts in lending to agriculture. And I'd like to welcome Matt O'Day to the chair. Matt is owner and manager of O'Day Farm Finance, which is based in beautiful Clare Valley in South Australia. Matt, welcome to the program.
Thanks, Mike. Thanks for the opportunity to be a part of your wonderful podcast.
Yeah, it's good to have you. Matt, can you just give us a little bit of your background and what brought you into rural banking?
Sure. Thanks again, Mike. Look, I actually fell into banking in the late 80s, Mike. Mm-hmm. When I left school, I was looking for some money. There was a job going in the bank. I applied for it, and I think, way back then, things were very different. So I was fortunate enough to get a job in a Big Four bank, which I thought would tie me over for 12 months or maybe even 2 years before I found out what I wanted to do. I was, straight, didn't go through university back then either. 17-year-old kid walking in there with no idea. And, roughly or close on 30 years later, I walked out. So, it was a very interesting experience, one that I had no idea I would last so long, but that's I guess the job satisfaction I got out of working in rural and regional Australia was too good for me to want to leave. So, that's basically my finance background. And most of that 30 years, Mike, was in the front line, dealing with customers. Mm-hmm. My last role there, I ended up looking after SA and WA. Their agricultural division for, again, one of the Big Four banks. So, that's my background in rural banking.
That's great, Matt. And so you brought a lot of wealth into your rural finance company now in helping farmers. A lot has happened probably in the last 10 years since the Royal Banking Commission came through. What's the major changes you've observed in the lending industry to farmers?
Oh, look, I think the major change to me, Mike, has been the focus on compliance internally amongst the banks. Mm-hmm. Now, the Royal Commission has somewhat enforced that upon them, so they can't just sit back and not act on the outcomes of the Commission. So, but with that compliance, including things like anti-money laundering and counter-terrorist financing. All of those really important things that, banks need to know their customer, basically, or know your customer. KYC is a term that's often referenced internally in banks, and that is extremely important. And it does take time for them to do because there's a lot of identification processes, and everyone listening to this podcast would have been through some form of pain with a bank getting ID. And look, they're not asking it for the fun of it. It is important to make sure that they know exactly who they are lending to. The other fundamental differences I've seen, Mike, are the focus of banks on cash flow budgets, and I'm talking specifically about farming now, or agriculture / agribusiness.
Mm-hmm.
And when I say the focus on cash flow budgets, years ago, and we were just talking before this segment around some of the differences in lending in the old days where, it was done on the back of a beer coaster. It's very, very different these days. Everything's documented, particularly within cash flow budgets. Perhaps, 10, 15, even 20 years ago, so if a farmer had a pastoral house or elders or nutrient debt, that wouldn't even be included in the cash flow. The banks really just thought, oh, well, that's out there. They can use that separately. But that's just, one small example of now the banks want to know all about that. They want to know what the limits are and what their clients are spending their money on. So the focus on internal governance within the banks around making sure they know who they're lending to, and secondly, making sure they know what their customers are spending and where. It's a big focus.
That's interesting about the cash flow. I know years ago farmers were asked to do cash flows by banks, but the cash flow tended to go in the drawer after that. The bank had said yes and then only get pulled out another year later when the review came up again. Has it changed where banks are actually requiring clients to do plan to actual cash flows so they can see that finances are managed more tighter?
I think with a lot of banking now, Mike, depends on the level of debt you have, and as to what the bank actually wants. So, and I'm being very broad in my conversation today, but if you owed, say, less than $1 million or even less than $1.5 million, the focus on the cash flow perhaps isn't as high as someone who owes 10 or 20 million, for example, and maybe neither it should be. Let's be honest. I do believe that some of that, put it in the drawer and look at it 12 months later, applies to still many clients, and it applies to many bankers as well.
Mm-hmm.
As long as they can tick the box to say they've got the cash flow, I don't believe there's, this is at the smaller end, I don't think there's too many bankers out there that are actually analysing those budgets or going through them. But the flip side to that is that, that mid-level, say 10 million through to, even up to 40 or 50 million, which is, a significant sum of debt.
Yeah.
There absolutely is a request for actuals to budget. There's probably a request from their accountant for three-way financials, three-way budgets, and all of those sorts of things, Mike. So to answer your question, sorry, in a very long-winded way, but a lot does depend on that debt level.
Yeah, good. Another aspect to rural lending is obviously valuing land. And I know back in the Royal Commission, one of the accusations to the banks is they tend to overvalue the land. And now we've seen land values just skyrocket in the last 20 years. And for banks, that's a good thing because they can get security against the land. Has land valuation changed much since the Royal Commission, or how we go about doing that for banks?
Yeah, look, I think the Royal Commission certainly highlighted a few cases where banks may have overvalued clients and then, for want of better words, might try to pull the pin on them. However, really looking back through the numbers, they were very isolated and maybe even more so isolated to one bank in particular. Unfortunately for them, it's not a good practice at all. So the evaluations and the scrutiny on them has certainly improved or increased by all banks to the point where every 3 years they're looking for an updated valuation now.
Okay.
Funnily enough, there are still a lot of internal valuations done by banks, and they can be done by the local bank managers if there is any local, or they can be done by the actual managers. However, what they've done is introduce their own internal valuation teams now, where those bankers are now audited, for want of a better word, on the valuations they're completing.
Okay. So it's become more tighter.
Absolutely. Yeah, absolutely. And we've seen and I think we'll continue to see a bigger push on external independent license valuations, Mike.
Okay.
Again, for those larger clients, that's something some of them actually want to see as well, because they want to run their numbers on, things like a return on asset, for example, to to get a current valuation, or they may be making strategic decisions to offload a parcel of land that is not working for them, for example. So it's not all negative to getting a valuation. Yes, sometimes people just look at the cost and say, I don't want to pay that. But if they're used in the right manner, they can be an effective tool.
Okay. So in some regards, getting an independent valuation done, if a bank is, if a farmer's going for a reasonable size of lending, would be a good proactive thing for them to do.
Yeah, absolutely. Yeah. There'll certainly be a lot of valuers around if they're listening that'll love me saying that, Mike. But there's also the flip side is I understand that there is a cost generally to the client. However, in this business that I am fortunate enough now to work in many cases, we actually, if a client is refinancing from one bank to another, the new bank will cover that cost of the valuation. So there are ways and means around those sorts of things, but again, as long as it's not just a ticking the box exercise, and that it's used for, it's got a meaningful purpose, and that both the client and the bank's getting something out of it, then it's not a bad tool at all, in my opinion.
Good. As I said in the opening part of our podcast, we talked about rural branches being shut, and obviously that means less, I guess, rural staff for lending. Has that brought a challenge for farmers who might be experiencing financial challenges? They're going through a drought or a downturn, to actually have banks that understand what they're going through? Or is that I don't know, I'm perhaps throwing the question around. It might be why rural finance brokers like yourself have grown in numbers, and you're now fulfilling that role for them.
Yeah, look, in short, yes. It can be a challenging for a client now to navigate their way through the whole process. And I think, your earlier comments around centralisation, you've also got credit people that perhaps don't sit in the same town, let alone state. In many cases, they're interstate. So, yeah, it can be challenging, I guess, on many different fronts, Mike, where, you can't just call someone who knows about your farm, knows where you farm and what you're actually doing, and has a good grip on where the season's at. For example, we're currently experiencing a great season for many in South Australia, which is awesome.
Which is a wonderful result.
Which is a wonderful result, yes. But that's also, we need to be aware of not just that it's a great season, that it can come with extra cost, and what's happened in the past two seasons. So if we go off 24, well, we won't say too much about that. It was an absolute shocker for so many. But then you've got 25, which, in this state, just speaking for South Australia, Mike, the yields are okay. So many farmers thought that they'd do all right. However, commodity prices now mean that, a lot of them only broke even, to be honest. So we're back now at this time of the year, flat out, doing increases for many of our clients to get through and take advantage of a wonderful crop. The challenge there is that we've got a lot of young, inexperienced bankers who don't see what's happened in the past 2 years and understand what that's going to mean for them going forward. So, and with due respect to all of those people, I'm not having a go at anyone here, but in farming, you just can't look at the season you've got. You need to look at history, and you need to understand what's happening in your local area. And unfortunately, centralisation. It's not unfortunate. Centralisation within banks has directly coincided with poorer levels of customer satisfaction and service. There's no doubting in my mind that, Mike, at all. The further you get away from a client, the harder it is to not only understand them, to service them, and to also know what they're going through. I hope that's answered that question somewhat.
Yeah, it is. And perhaps I mumbled the question too. That's a challenge for farmers too. I guess if we're getting centralisation happening and less internal knowledge in agriculture in banking, how do we as farmers, if we're going to get financing, the old days we used to know the rural bank manager and he was the biggest mentor in town. I'm not going to do anything unless I run it past him. Yeah. But now it's changed so much. So is there wisdom in coming through people with your skills, Matt, as we're going into the banking and looking at borrowing more? Or do we sit back and have to brush our shoes off and go to Sydney, go to Melbourne, go to the capital cities and present our financial cases to them?
Well, firstly, Mike, I think it's a sad day if a farmer has to go to a larger capital city to present an opportunity. And I'd like to think the industry is mature enough for that not to happen. You know, there's some fantastic bankers in capital cities who have access to a motor vehicle that should be able to get in and get out and see a client. Look, if I wasn't out on farm myself shaking hands with my clients and meeting them face to face, I don't think I'd have half the clients I've got. So, and I don't think banks underestimate that face to face requirement. So, yeah, it's I do believe what we're seeing and what we'll see more of, and I'm not just going to sit here and say go and use a broker, Mike. Whilst I'd love to plug myself, it's not who I am or what I'm about. But I think you'll see more and more brokers use external experts to assist them to put things together.
Right.
You know, whether that's someone like myself who's got the experience in broking, or whether that is, you know, their accountant. I do see a lot more reliance on accountants these days. There's tools like even, you know, your tool with financial modelling and things like that. So P2P Agri tools, I'll give you a good plug there, Mike. But
thank you.
Yeah, I think it's adopt these other means and use other professionals who can fill the gaps that many of the bankers used to fill or used to do. So, yeah, it's that's what I'm seeing anyhow. Is as the level of experience and expertise dissipates from regional areas, many farming clients are going, oh, where do I get that from now? So they are looking around at other external professionals who can help them in their business.
As if you're sitting back as a banker and farmer comes through the door and they're looking for, it's not a small number anymore to buy the next door neighbour out. It could be $3 or $4 million. Does a banker look at it more favourably if the farmer is on top of their numbers and are going through it, or whether it's the broker or the advisor that's presenting the business on behalf of the farmer? Or is it a bit of a mixture of both? I guess what I'm trying to point out is it up to farmers now to take on more of that business presentation responsibility now that, I guess banking's getting a bit more sophisticated?
Oh, the short answer is yes, absolutely. And one of banks' key criteria is management ability, which they'll call it. And, if a farmer can't articulate their own numbers and or understand, their some of their key ratios, I'm not advocating that farmers need to be all over interest cover ratio or EBITDA or all those numbers. There are people out there that say how to deal with your bank, make sure you are all over them. But, the primary responsibility of a farmer is to make money out in the field or out in their paddocks. But they do need to have a good, solid level of understanding on what's happening with their books. And a lot of now, Mike, with the move to, programs like Xero and these other financial software programs, you can get real-time data. So you can make decisions, financial decisions reasonably quickly. But maybe that, we've seen a growth in the broker market. When I started over 6 years ago, I think there was about 1 in 10 agricultural loans done. And it's now about 4 in 10, rapidly approaching 5 in 10, where to the point where one bank last year told me 80% of their new to bank business came in the door via a broker. So
right,
it's pretty clear to see that farmers are reaching out for that support. I think there's probably a few reasons why that might be the case. Is interest rates. A lot of farmers now are more conscious about what rates they are paying, and do they have the right structure of product? It's the old term debt versus overdraft structure. I see in so many cases, so many clients have got 80% of their debt sitting on an overdraft and 20% of their debt sitting on the cheaper term loan.
Is that right? Wow, that surprises me.
Yeah. So look, it's or you've got, there's other accounts that are like just like a big line of credit. Where it all sits in one. So there's lots of different structures out there, and I guess that's the fundamental role of a broker or another professional, is to put that credit paper. So if they're looking to buy next door, a broker would complete a credit paper, and you've got to have the skill and ability to write that paper to appease the credit manager, not the banker, not your manager. They don't have the authority anymore to sign off on these things. So, it's really around understanding what the credit manager in that bank wants to see, what's important to them, and as importantly, what's not important to them. Yeah, so it's it's not a simple case. And when I say management ability, you just if you're not portraying to a bank or a credit person within a bank that you've got a good grip on your own business, they're less likely to say yes.
Right. Okay, that's great. Thanks for that insight. How do you think, now that banking has changed quite a bit from the last 10 years of the Royal Commission, how do you see it moving in the next few years, Matt?
Well, I think, Mike, that compliance won't go away. That understanding your customer or know your customer, all of those things, they're here to stay. So we can all, whinge about them and say, oh, it's a time waster, blah, blah, blah. But the reality is we don't want our banks, and we do have 4 of the safest 12 banks in the world, by the way. We do not want them funding terrorist activity. So I'm a big supporter of the banks in what they're doing there. The challenge for the banks is since the Royal Commission, a lot of that internal compliance is taking away from their customer service. And again, that's why I think you'll see the rise of external professionals helping out farming clients. And not just farming, I've got, many local businesses that I also help out these days. So it's, it might be the local builder or the local barber shop. It could be any of them, Mike, that also need help. And if there's no bank in town or no banker, then it's just going to rely on other people. And as the banks get less and less experience as well, it's becomes a ticker box exercise for many, doesn't it? So
yeah, it does. And I guess just before we wind up our discussions, is there a lot of difference in pricing between the banks, Matt? I don't know. It used to be years ago, farmers were advised to, shop around their finances every 4 or 5 years, because it is a competitive environment, and banks will try and make profits. Is it worth doing that? Is there a benefit in doing that? Or is there a benefit of trying to find someone you can build a relationship with, and there is value in long-term relationships? Or that might not be the case anymore. I don't know. What's your feeling about that?
Well, the first thing I'd say is that everyone's a little bit different in their own feelings on that subject. It's a really good question in the point that, some people are happy to pay a premium to stay with their existing bank and banker. And personally, and being old school, Mike, I think that's fantastic. However, the challenge that I would put back to those people is, what is that premium? What's your existing manager worth? Is that $5,000 a year? Is it $10,000 a year? Is it $20,000 a year? When you put it back into dollar terms, it can change that decision-making process of many. So to try and answer on your question as a whole, yes, there is a big difference between banks. And they've all got different little ways. They call things, different, whether that's a line fee or a quarterly management fee or an undrawn limit fee. It's not just your rate. There's certain banks out there that just talk about their customer margin, Mike, because they try and take the focus off the actual rate. So it's important to really understand what you're actually paying, number one, because if you think you're paying 7%, but if you add everything else on, it's probably closer to 8%. So that's where, I guess, having spent a long time in a bank, you pick up all these little things that they're putting in there.
Yeah.
But I don't, and unlike many, I don't actually go out and encourage people to swap and change banks all the time. I think if you can get a better deal from your existing bank that is competitive in the marketplace, why move?
Yeah.
Now, full disclosure there, as a finance broker, I get paid more if clients change banks because we get an upfront fee, Mike.
Mm-hmm.
Whereas if they stay at the existing bank, we only get paid a trail commission on their existing loan. So you may come across some brokers who will be really keen for you to refinance, and there's a good reason why. Well, it's not a good reason, but that's why.
Yeah.
So I would love for more people to say, no, I really like my banker and I want to stay. And again, with respect to all the bankers I deal with, the challenge is they don't stay in their role long enough.
No.
So, if there's one there that's, if you've got a banker who's been your manager for longer than 2 years, even 12 months these days, you're actually doing quite okay. But, then it goes back to that first point of how much are you paying and is that competitive in the marketplace, and how do you know unless you talk to someone else? That's the challenge.
That's the challenge we've got.
Yeah.
And the other, just to flip the coin around a little bit, a lot of us like that relationship with the bank because when things get tight financially, we've had a good relationship with that person and the bank might stand next to us for a couple of tight financial years. And so, yes, we can get funding that way. But is that loyalty still there? And I know that when I was working in banking, there seemed to be a lot of difference between some banks that would help farmers in financial difficulty and others would treat them more harshly. And that's some area we don't know as people lending money as to which bank's going to stand by us in the harsher times. I don't know how you make that judgment or how you get the best result for that, Matt. I don't know whether you got a feel for that.
I do, and it probably goes back, you can look at things like also, Mike, farm debt mediation, and, when is that offered by banks? And we're talking about, the uglier side of banking now, or as many banks will refer or clients will refer to them as the bad bank. So each bank in Australia has got their own division of the bad bank, that just called something different. And the challenge, should you be unfortunate enough to get into the bad bank, and mind you, many clients that are sitting in the bad banks, predominantly through seasonal conditions. So
it's not their management; it's really the downturn of production that's caused it.
No, that's right. Yeah, that's exactly right. But the challenge for some of the banks, Mike, is their level of knowledge on agriculture is not great. So I'll give you an example, and I won't mention any names, but one particular bank, their bad bank was based interstate.
Okay, so they weren't even in the state that we're farming.
Weren't even in the state. And that was, I got a SOS call from, it's not even a client of mine who wanted some help. I looked at everything and the expiry date, he was a broadacre farmer, and the expiry date of all his facilities was sitting at September. And I said, well, why are your facilities expiring in September was the first question I asked. And he said, well, I don't know. So I got in touch with that bank and they couldn't understand why it wasn't a good time of the year for a broadacre farmer's facilities to expire. So, that particular banker asked me, well, when do they sow the crop and when do they harvest it in South Australia? And I thought, oh, my God, these are some of you're shaking your head. I shook my head, Mike. I thought, these are some of the horror stories. I'm not saying that they're all like that at all. That's far from the truth. There's many banks that will work with their clients for years to try and get them out of that bad bank, and they do a really, really good job. But there is certainly there's still those horror stories around where you've got people who know nothing about agriculture or the state or what the conditions are. That poor guy had spent all his money trying to get his crop to grow. So he's at the worst possible time. And then that gave the bank the full right because he didn't have any income coming in, obviously.
Well, not until harvest happened at Christmas time.
That's right, yeah. So, these are the common sense things that, unfortunately, I come across regularly with banks and bankers that just don't understand the industry that they're working in, even though the Royal Commission, I believe, one of the recommendations was they they should or must know about the industry. We're still seeing a lot of challenging times with inexperienced bankers. Yeah, so farm debt mediation, Mike, I'll quickly touch on that. It is not offered early enough by the banks. They would prefer not to go to farm debt mediation, and I know there'll be banks listening to this that will disagree with me. The simple fact is it costs money to attend farm debt mediation. The banks don't want to pay it. So they will try and do whatever they can do to lose you as a client before going to farm debt mediation. You know, a lot of those bad banks internally will talk about, or have you spoken to someone to refinance? The challenge is that if you're in one person's bad bank, it's challenging to find another bank that's going to take you on. So
that would be really hard.
Yeah. And again, I will reiterate, Mike, that some of the banks do it really, really well, and they work closely with their clients. I've known clients to be in that bad bank for 4 to 5 years and then come out the other end. So,
good. So there are some good stories that can come out of that.
Absolutely, there is. Yeah. So hats off to those banks who have those divisions staffed appropriately with good staff that know what they're doing.
So, Matt, the only way we're going to find out about that as farmers is to talk to people like you guys that are more independent in the industry to get that insight on thinking.
Yeah, look, experience is becoming a real challenge for many, isn't it? And, I only know these things because I'm old, Mike. So
you haven't looked at what colour of my hair yet, Matt.
And that's, you get experience, you get old. That's as simple as it is. But, I mean, I'm fortunate enough to have been around a long time, but it also, it helps that you be in the one industry long enough, you sort of know what's good and what's not so good, and you can steer the people in the right direction. If we are doing a tender proposition for a client, we'll sit down at the end of that tender and sit down and not only go through the interest rate and the fees and charges, but also the bank, their level of appetite for agri, and the actual proposed banker for the deal. So it's a
much more broader view of what the deal is going to give.
That's right. Yep. Which I feel is pretty important these days. And again, that will come down ultimately with the dollars for many at the end of the bank. To touch on your loyalty question, a lot of clients 65 plus years old, there is still a level of loyalty. However, I can strongly tell you the next generation, their children, loyalty is fast disappearing. And if their children are now involved as well, so we're talking, under 24, under 25 years of old, there's almost zero loyalty.
Wow.
Give me the best price. But credit to them, Mike, they know that they can manage a lot of this stuff electronically with technology and all of those sorts of things. They can do a lot that we simply couldn't do when we were their age. The access and the tools they've got, wow, it helps a lot of decision making. So cheapest price, let's go for it, Matt. I hear that often. Yeah.
Right. Okay. And sometimes the cheapest, you don't get the best quality. But anyway, that's how the industry works.
That's true. Yeah.
And that's
very true.
How the economy works, not just the banking industry, but that's broader than that. Look, Matt, thank you so much for your wisdom and sharing of that knowledge. I know it's it's a shifting thing. And, if we have this discussion in 10 years' time, it's going to be amazing what we're going to be talking about, I suspect. But please, everyone who's listening, take our advice as a general nature. It's not specifically recommending you to do anything, because I know we're talking in a very complex finance area. But Matt, thank you so much for your contribution. And for those farmers out there, don't be scared to talk to rural brokers, because they're coming from a good background and they give a great service. So thank you very much, Matt, for joining us today, and look forward to catching you again down the track.
Absolute pleasure. Thanks so much for having me, Mike.
Thank you.